Good morning, ladies and gentlemen, everybody. Welcome back. Happy Monday morning to you all. So, as the stream populates, we'll run into what we need to talk about today, but off top of my head, we have seen stock TYME move, NOAV's kind of up, XBIO was moving earlier, AMC really doesn't look like it's got a ton of volatility in today. IMV was another penny stock, and there was something with a D. Can't remember. I'll have to double check that one. But give me just a second. DYNT, there we go. All right, awesome. All right, so we're going to start here with TYME. So, delete the drawings really quickly. Give me a second. Sava news. I will take a peek at Sava. Let me just pop it over here. Okay. So looking at TYME, we'll first go to the price here at 149. Then we will go to the price, well, we're going to mark this one here, and then we're going to go to this guy. Nope, wrong one. We're going to go to daily chart. And we're going to mark that guy. Then we're going to mark this guy. And that's pretty much it for now. So this morning, TYME pops up on some cancer news. It goes to the mean. These two levels here are mean, so this is 4 hour, this is daily chart. So long story short, this was kind of its first resistance marks in the day. You'll notice when we get to the red line on the day, we pull back and then we push up. We get to the second red line, then we pull back and then we break through, etc., etc., etc. Kind of looks like this might roll down and break back into the zone, but for those of you that are currently long the stock TYME, just know that if this red line fails here at 167, then the projected downside target for that move will be back down to about $1.49. So for right now, the current support in the market for TYME is at 167, and if 167 support breaks, you will see TYME most likely move down to $1.49. If in the event it doesn't actually break the $1.67, then we will most likely go for a +1 deviation move, which would put you into this top tier box from 198 to 210. So for now, intraday, our max long target for TYME is going to be that orange box on the top. Sorry, I meant to make that red, excuse me. It's going to be that red box on the day, which is 197 to 210 max target. Right now, it looks like TYME might break support, and if so, it's going to take us down probably towards the $1.50 mark. So that's pretty much the entire analysis there for the stock TYME. Which, yeah, I mean, it does kind of arguably look like it's getting bearish. Back from COVID, you didn't miss nothing. Did you miss a couple things? All right, so that was TYME. I'm going to look at this next one, which is DYNT, I think. Yeah, so looking at this DYNT stock, this one broke up last night or after hours, over the weekend, whatever you want to call it. So pretty much to put it simply, this is the long-term resistance. These two red lines here at about 210, that's a long-term resistance. To get the market up and through the 210 mark can lead you to a bigger move. Let me explain. Go to the daily chart, long-term chart. You see that blue line right there, boom. You see on the 4 hour chart, you have that blue line right there, boom. So long story short, we've already hit long-term resistance. It actually went to +4 deviations today. So again, I guess the best way of explaining, well, let me just go back and do that too. So you'll see that, look at where the bottom of this 4 hour candle is. You see that red candle? Look at where the exact bottom of it is. Not exactly, but probably off by about a penny. You can see we sold all the way down to the -1. Well, it's actually +1, but it doesn't really matter. I'm just probably going to confuse you guys more. But anyways, so you'll see that we sold all the, this was overbought. So these two lines up here, 3 lines, really overbought. Then it pulls back, breaks down +2, runs to +1, back to +2, almost back to +3, back down below +2, having resistance at +2. So going forward into the open, your immediate breakout level is going to be $1.85. When you break $1.85, or if you do break $1.85, then the market will shift you up to 210. If you can actually get through 210 successfully, the next shift would be up to 232. And if you can get through 232, then the sky's the limit. Max target would be up to 330 to 370 for the time being. So again, those are all the key levels that you have to watch for, and that's pretty much it with DYNT. Alrighty. Let's move on over to DYNT there. Oh, XBIO is another one, but we probably won't have to do much with this. So yeah, XBIO ended up selling off. So if we go back and look at the long-term chart, you're basically going to see that this was a double top on +3 deviation. So again, if we go to the daily chart, you see the blue line right there. Let me delete all the old drawings as well. So give me a second. Alrighty, so you see +3 is right there on the daily chart. You go to the 4-hour chart. Same thing, it's like right there. So nonetheless, there's 2 red lines that I put on the chart. Those are the long-term resistance marks. That's where you stopped on Friday, stopped Friday, sold down this morning, bounced back right up into the red line, sold down. So for the time being, I don't really see a ton of great trading opportunity on XBIO because it blew up Friday, pulled back all the way, blew up this morning, hit resistance, pulled back. So it's already done a good long and it's already done its good short. You've retraced back to about the 50% mark of this move. Therefore, you're probably onto a bounce, more hesitative trading as opposed to breakout trading. So don't really care for XBIO all that much this morning. I could be wrong and something crazy could happen. If that happens, awesome. But for the time being, I'm pretty much neutral on XBIO. But wanted to mention that it did in fact hit a bunch of resistance. I will say this. In the event that it does actually kind of jump back up from this bottom, you'd be looking for a target of that red line. So this bounce move is targeting back to about that red line of 362 for the time being. Whew, shitty. Looks like our friend TYME has started rolling below support a little bit here. Yeah, TYME going down, so we could take a peek at this really quickly. So look at TYME, how it broke that support that we had mentioned, and look at where it's almost gotten to. Hasn't quite gotten there, so there could arguably be a little bit more room down here for TYME until it hits about $1.49. So we'll see how that all kind of develops here. Now I'm going to move over to IMV. Is that the one? Yeah, IMV. So it looks like IMV got some news this morning, just like pretty much all stocks end up gapping up overnight. So anyways, there was some news on IMV today. All right, so right now the resistance in the market for IMV is from 275 to a price of about 293. Your current support in the market is 205, so you're off the 205 bounce. So again, 205 is support. We bounced, we pulled back, we held above, we pushed back to resistance, these 2 red lines. So that is your breakout point on the day. If you can successfully break those 2 levels, then you would look to target up probably into the 348 to 380s. So for the time being, we're just neutral until we see the market successfully crossing up and through the 270 to the 290 mark for a long move, excuse me. Alrighty, going over to TYME. Looking at TYME, you can see pretty much where the candle's gotten down to. Hasn't quite gone to the price target we told you, but we're about, call it 5 cents or 6 cents off target so far on the downside swing. Alrighty, pretty good, not bad. TYME, just another couple pennies down, and we'd be 100% on target. All right, ladies and gentlemen, so that was, what we were trying to help anybody who was long on the top of this move understand your risk. If this kind of wedge snap support, your risk is all the way down to at least that 149. That's the way you have to view the market. So TYME, analysis so far working pretty spot on. That's good. So this is the support of the market. In order to keep TYME up, it has to stay above $1.49. If you don't stay above $1.49, then you would probably go back to $1.43, but I wouldn't even really try to trade for a downside move to $1.43. Okay. Oh, yes. Next one on the list. Sorry. NAOV. All right. So NAOV was a stock on Friday that picked up towards the end of the day, went absolutely nuts. I don't even really know why it went so nuts. I don't remember the news that it had. So this is 7/26, Monday, Sunday. So that would have been 7/23. Shares halted circuit breaker higher after the company got Australian Therapeutic Goods Administration approval for its EuroShield system. Triples trading on report of its UTI treatment. Why Nanoven, blah, 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 blah. All right, so stock is up on some news regarding its approval from the Australian administration for its EuroShield system. Yeah, there's no shares to short on this through Lightspeed. The stock is already overbought. Just because it's overbought does not mean that it can't go higher. But if we look at the long-term chart, you're going to know exactly why it's stopping where it's stopping. That's because I'm pretty sure it's at resistance. No, it already went over. Excuse me. So you will probably notice when I add levels here, you'll probably notice that we got decent interaction at these prices. So the prices that I'm putting on the chart right now are the 3 deviation prices. It could have changed a little bit since Friday, but should be still pretty accurate. So nonetheless, the 2 levels we're putting on the chart are the +3 deviation mark in which we broke through. But what we should probably see is that when we look at these 2 levels on the chart, once we go back to the 1-minute chart, that on Friday's trading session, we should have seen resistance at those 2 red lines that I showed you. Probably got a pullback, and then that pullback got bought up through those 2 red lines, and then a big short squeeze happened. And the reason a big short squeeze probably happened there is because that is generally the level that people are going to look to short at when you're at +3 and +4. And in the event that bulls are strong enough to push you through +3, +4, then you're going to shake out all the short sellers that entered at +3, +4. So let's go back, take a look at the 1-minute chart. There really wasn't a whole lot. I mean, you can see we stopped there for about a half second, but just blew right through. So you can see we ran up to those 2 red lines, pulled back, but just instantly right back through. And so this didn't have great resistance, but you can also see we had 2 red candles, breaks up big, pulls back almost down to those 2 red lines, and then it kind of goes. So that was the throwback or the pullback to retest the +3 deviation breakout on Friday. Obviously, it pulls back, holds, and then you get above and you get, once again, another big pop taking out short sellers. So for the time being, I kind of want to be on the long side, and I think you should be on the long side, at least to start the day, because this is a really strong run, and the market closed above the +3 and I believe the +4 deviation mark. So the market was strong enough to hold above significant long-term resistance levels. So for the time being, I got to watch this long. I'm not even going to bet bearish on it because I can't bet bearish on it, so I'm only left to really be long bias, so I'm going to have to watch long bias. Okay. Whoo, so I didn't touch on Bitcoin yet. So for those of you that watch my channel, obviously you guys will know that my desired buy point is down here, which we didn't get to still, right? And we had this big breakout move. So in order to go to the price target and the desired buy point that I would like, it's going to be very hard for it to do now, because essentially you have to take back this breakout move. So this breakout that just happened has to obviously come down, and we have to cross below kind of that gap and that breakout price in order to really kind of be back on bearish momentum. All right. And you will also see that we kind of snap the downward wedge. So for those of you that watched the analysis on the video where I said my price target and or desired buy point for Bitcoin is going to be down at like 22 to 19,000, we had mentioned this descending wedge and put down the trend lines and basically said, you know, as long as we're following this trend down, that's good, but the bulls are going to be looking to break you above that wedge. That ended up happening, so market squeezed up. So for now, that price target that I gave is pretty much not going to happen, at least for now. So on the way up, I would imagine Bitcoin's going to be on the bull side today. I think that there's just too much optimism after such a big move. Let me see where I'd try to get this to go to, though. I mean, well, there to there, right? Oh, 1 second. Okay. Yeah, so for me, really the max long target out of this kind of move that we're seeing / breakout with Bitcoin would only be up to 44,800 to 42,870. Currently, the pullback support for Bitcoin is down at 36,450. So in the event you actually pull back, you should expect your low risk dip buy would be around this price. And you can see it kind of broke out there too, got there and big volume came in. So you can see market moved up to red line, crossed through red line, big volume spike. So that right now is a significant level. So in the event Bitcoin pulls back, that would be the dip buy support for the day down at 36,419. The max long target for the day on Bitcoin should probably be up to 43,000 to 45,000. Okay. She. That pretty much covers most of that stuff. EBON on Pfizer. Mr. EBON. Yeah, EBON, kind of little double bottom there, gapped up, trying to get over this guy. Yeah, I could see this having some momentum on the upside, I believe. Your max long target for now should be up to 323 to 360s, which don't exist within the realm of possibility for right now. But yeah, that's EBON. All right, we'll take a look at AM McSizzle. I don't actually remember what my analysis was for Friday on this. I really can't remember. I really don't. But anyways, the last thing that we did touch on was that you wanted to be bearish and that AMC would be bearish as it crossed down below the mean, which was at about a price of 40, so then it broke down. We didn't have any trending support till down here, so I remember now. So the recommendation was basically you're watching for AMC to hold price action trend as opposed to deviation trend. And if you can hold price action trend and move back up, you should target now that we're kind of holding trend and it looks a little better than it did on Friday. I'm kind of more on the long side of this today, wanting to see prices of 40 to 40.70. So if I'm right and this does move on the bull side, my max target for the day on AMC would be up to $40 to 40, basically 40 to 40.60. Okay. I mean, Sam, regarding your question on volume, I mean, volume generally picks up at key levels, so it's you to determine whether or not it's a true breakout or not. But the reason that volume comes in around those levels is because they're generally very key levels that a lot of algorithms and your computers and institutions trade around. So that's generally speaking why a lot of big volume comes in there, because once one of those levels is broken, here's the thing. A lot of big institutions and a lot of smart money generally trades around the deviation levels. So in the event a big trader is so again, if big traders trade around those levels, they generally have big size, right? And the game in the market pretty much is you profit when your opponent loses. And so again, if the opponents in the market are all big guys and all these big guys have a lot of big size and a lot of big volume and they're trading around these deviation levels, when one of those people is wrong, then they're going to cause a big move in the stock. See what I'm saying? So, like, for example, let's just say that, like, JP Morgan was shorting at this deviation level, right, in the past. And today we're able to get up and through that deviation level and a bunch of volume spikes in. It could be the fact that there's a bigger guy covering positions at those levels, so to speak. But that's generally it. They're just very good levels to be trading around. A lot of volume comes in. A lot of smart money trades it. So you're gonna get bigger moves around those levels, or a lot of volume around those levels. When Apple was at 123, it was considered a key level. Let's see. 123. So the last time that we had mentioned being bullish on Apple, I think was like down here. In these zones, we had mentioned this is where your dip longs would be, and our target was only back to the mean, which at the time I think was 132, or wait, you said 132, 123. Yeah, so the last time we were mentioning longs on Apple was down here with the target of maybe like 130-ish, which we were just really targeting back to the mean. And then you can see we broke the mean and went for another one deviation move. So again, that's generally how the market works. Is they move in deviations, right? They don't move $10 a share. They don't move $5 a share. They do, but they don't, right? They usually they move within deviation. So whatever a deviation is for that given stock, that's the projected price movement. So for right now, a deviation move on Apple is from 136 to, let's call it, for simple math, 128. So 136 to 128 for simple math. So right there, that's an $8 move. So from the white to this orange is an $8 move. If we go from the white to this orange up here, it's an $8 move. If we go from this orange to this green, it's an $8 move. If we go from this green to this blue, it's an $8 move. If we go from the blue to the purple, it's an $8 move. Markets move in deviations. So whatever the deviation dollar value is, right? Monetary price movement of the deviation, that's generally, how you can expect your stock to move, right? So the higher the price, the more volatile, the bigger the deviation, right? So if we look at Shopify's deviation right now is, we'll just say from 1,560 to 1,400. So we'll just say it's from, 1,560 to 1,400. So you have $160 deviation. So it's 160 from there to there. It's 160 from here to here. 160 from here to here. 160 from here to here. It's always the same equal movement no matter what. Okay. So again, when the markets are trading down in this instance near the yellow, you could be like, all right, I think we can bounce the market one deviation back to the mean, and that would be a $160 swing trade theoretically. Okay. So that's how you can always kind of get an assumption of what your risk is, how far it can go. And here's another suggestion: how you can always determine a 1 to 2 profit loss ratio in the market, right? So like I said before, if the deviations are all the same in terms of the price movement, so if, so we'll go back to Apple, right? So if Apple is $8 per deviation that it moves, okay, halfway of that would be $4. So if you have found yourself in the market on Apple, positioned correctly, where you could successfully or hopefully get one deviations, and where you're taking your entry is in fact on a support, and you start to move for a one deviation move. For example, let's say that we took our entry on Apple at the this would have been -1. So we take our entry around -1 deviations. Our stop loss theoretically could have been, maybe a break or a close. How about that? Maybe like a close or a trend below the half deviation, which is the dotted line. And we're looking to go back to the white line, right? So your entry's here, stop loss here, target is, here, okay? Remember, deviations are 1, the dotted line is half. So wherever the half dotted line is, that's halfway between the solid line. So if you take an entry at a solid line, stop loss at the dotted line below the solid line, targeting back up to the next highest solid line, then you will always have a 1 to 2 profit loss trade within the market. Every time. Guaranteed. You'll never have to question whether or not your trade's a 1 to 2 risk to reward, because it's literally showing it for you. Thumbs up. It's lit. Alrighty. All right, let's take a look at mRNA. Why not? Yeah, I got a very sad email this morning from it was a student, client, whatever you want to call it. But I got an email this morning that he's currently his wife is sick. They got, you know what? I'm just never mind. Not even gonna say it. She's gonna be just fine. She's gonna be just dandy. Forget what I was gonna say. It's not a smart thing to say online. It's just not, unfortunately. We don't have that FREEDOM anymore. Kind of. So anyways, mRNA, max target for me, which was sort of the same. They've changed a little bit, but we did mention that on like mRNA, once you start seeing prices of $375 to the price of now 400, you should probably be bearish. So as we start to near 375 to 400, we just can't really be too long bias. mRNA, that's a price where we expect you're going to see decrease in price or pullbacks, so on. Yeah, I mean, that's pretty spot on so far. We'll take one peek at the market. So once again, wrong about the market. I've only been right about the dip buy. I just haven't been right about how aggressive each day is going to be following that. So our recommended long for the market was, we'll just say the exact penny to the bottom of that candle. And then we didn't really give you a long tart. Well, I mean, I guess we kind of did, but didn't. Pretty much any time you buy the dip, you're always targeting back to the mean. So pretty much off this dip buy, we didn't mention it, but you're always targeting back to the mean, which we've gotten back to the mean. So usually most of the, which I've said this for the past couple days, right? Most of the long moves already been done. We've gotten back to the mean, right? The first two big days was this bottom and this second day. There on after, we've had good green days where it's just kind of been creeping back to the mean. So nonetheless, the current support of today's market on the SPY is going to be at 437.60s. So pretty much 437.60 is your support on the market today. That's why we bounced here. The reason the market on the SPY went down to here and bounce is because that's where the mean was. You could figure out that bounce price before it happens just by knowing where the mean is. So if you run the same system we do, you would know where the mean is, which means you would know where the bounce level is pre-market for the SPY before it gets there. Thumbs up. Alrighty. So nonetheless, I will say that I'm neutral to market. Again, I really don't think it's going to be a big long day. I'm even more so thinking it's going to be kind of slight to neutral, and maybe it trades back down to the statistical mean today. All right. So that's all we have for you here today, ladies and gentlemen. I do appreciate you guys tuning in. Make sure to hit the thumbs up button before you go, and the notification bell. On August 1st, which would be next week, August 2nd would be a Monday. So on August 2nd, I will be moving over to YouTube full time. So just an FYI, you'll probably see a little bit more of me for longer than you normally would on Monday of next week. So with that being said, I will catch everybody back. Oh yeah, by the way, won't be on tomorrow morning, won't be on Wednesday, might not be on Thursday, not really sure because I'm getting my wisdom teeth removed pretty much in the next couple hours. So depending on how that whole recovery thing goes, I would expect I'm good. I'm pretty much guarantee I'll be fine by next week, of course. So just an FYI, probably won't be on for a good majority of this week as I'm getting my wisdom teeth removed here pretty soon. So anyways, that being said, I'll see you guys later this week or beginning of next week, guys. Take care.